everyone, and welcome back to another portfolio update video. The portfolio is currently sitting at $8,611.29. For the day, we're up a 177.42, or around 2.1%, down 3 after hours. For the week, we had a really good week, up 323.53, or around 4%. For the month, we are up 195.47, or 2.32%. For the 3 months, we are up $811.90, or 10.41%, which is insane. For the year to date, we are now only down 747, or 0.09%, so getting all the way back up there after some low lows, as you can see. And for the year, aka the all-time chart, as you can see, we are up $611.29, or 7.64% on the all-time chart. And you can see I flattened out my initial deposits to $8,000. And yeah, so the portfolio is doing really good. You can see we've had a really great week. Can't lie. At one point, it was looking very dire. So the week started out here. On Monday, we dipped as low as $8,012 in the portfolio, which is kind of crazy that we were able to even go so low and then get up to being so high. So at one point, we were down $275 in the portfolio. But luckily, thankfully, we ended the week up $323. So basically went from $8,012 in the account to $8,612 in the account. So there was about a $600 move at the biggest point between the low to the high this week, which is kind of crazy. But a lot of stuff is going on in the portfolio, so let's get straight into that. First of all, let's see the options we got. We currently have, and let me put this on total return, we have the CVE call credit spread, which is still here, somehow is still worth some kind of money, which is kind of unbelievable, but still letting that one ride out. I do believe this does expire this Friday, which is great. Next up, we have a PINS call debit spread, which is totally worthless. I'll go over this in a second. Just kind of having some fun with the portfolio. As I've been saying in the last couple of videos, this is really an experimental portfolio, and I'll go more into that in a second. Moving on down though, we have the Riot $9 put, which is up 11 bucks, currently up 91%, priced at $1 for this Friday. We have a SoFi 2 option strategy for this Friday, which is a set of 2 covered calls, which I placed in the same order, so it says 2 option strategy. Really, this is just 2 covered calls on SoFi that were placed in one order. You can see I have the $8.50 strike covered call for this Friday, as well as the $8 strike covered call for this Friday, which is currently in the money. SoFi is currently at $8.13. So in terms of extrinsic value, this is entirely extrinsic value, and this $8 call here is 13 cents of intrinsic value. So in the high teens of actual extrinsic value. So there's still quite a lot of money that needs to come off of this contract by expiration date, assuming SoFi stays at the same price, of course. And you can see I collected an average credit of 15. So in theory, if SoFi's price does not change or it goes down from here, we will end with a profit on Friday. Regardless, I can always roll this contract for more premium and more capital gains by rolling up a strike, which I plan to do if this is in the money, or if it's deep in the money by some miracle, then I will let it expire and I'll just sell a put at the $8 strike to try and get back in on SoFi. So I'll either do one of those two, not really sure yet. We'll see when we get there, because this is still very overpriced. But yeah, so let's keep going. So we have that, which is currently down, of course, because SoFi has been rallying quite a lot this week. Then I have the SoFi $7 puts. I have 2 of these currently open for this Friday as well. Currently up $12 on these with a price of 2 cents. So those are going to go worthless probably on Monday. Then I have the SoFi $7.50 put for this Friday as well. Quite a lot of stuff for this Friday, by the way, which is currently up 28%. Then I have a Riot $10 put, which is up about 50% for the following week, as well as a SoFi $6.50 put for the following week, which is also up. A TSLL $7.50 put for that same following week, currently up 7 bucks. A Riot $7.50 put for the week after that, so first day of March, which is currently up, and a TSLL call, or 2 of them rather, at the $11 strike, which are currently both up quite a bit for that same first day of March. In terms of prices, these TSLL calls are worthless. However, currently TSL is a little bit far away from my my original cost basis. So I can't really sell a call right now unless I want to really send it pretty far out. Actually, I might be able to do like a 40-day call option. Oh yeah, no, definitely. Yeah, look at that. So I can actually roll this. I don't know where I got that idea from, but if I wanted to, I can sell a new TSLL call contract at the $11 strike. It will be 40 days out, but you can see I collect a gigantic premium of $30 per contract. So we would collect $60 total on this. So this seems pretty worthwhile. And actually, now that I look at it, these options prices do not look correct at all. So that's probably not actually the case. I didn't notice that till just now. So let's ignore that actually. Let's see what 48 days has. Yeah, this is totally messed up. Okay. So I don't know. Right now, the option prices are completely off for some reason. So we'll just have to wait and see. That's very incorrect. Yeah, we're just going to ignore that for now. But we'll see what I can do with that. Same with the TSLL 750 put. There's a rally on TSLL this week, which is nice. These SoFi puts are going to go worthless. This Riot put is worthless. Riot has had a crazy rally this week. You can see it's at 14 now. At one point being down in the 10s. So we might not be able to sell any more puts on Riot, or at least we might have to go like really far out expiration, like monthlies. We might have to just do monthlies going forward on Riot just because of the price has spiked so much. I'm gonna have to do research into what caused the spike, because it may be the case that we need to just increase our acquirement prices. If some really good news came out for Riot, that would make sense that its valuation would be higher. But also look, you can see that our odd lot of shares, our 6.5 shares that we were able to buy with the premium we made off of Riot, has currently made us an additional $20, which is actually really good. Which is crazy because if you look at our actual market value, it's only $92, but we were able to make $20 off of that, which is kind of crazy if you think about it. So that whole strategy of selling premium and then investing that premium into these risky stocks has worked out in this case. So even though we weren't able to get assigned our odd lot of shares, our 6.5 shares, were able to rally and ride this wave, and you can see we made $20, which is not insignificant whatsoever, especially considering I only have 6.5 shares. So yeah, that's pretty cool. We can go down and actually look at how many odd lot shares we have now. You can see our total return on all of these stocks is actually looking really good now. Both SoFi, of course, Riot's up. SoFi's up quite a bit. TSLL, the loss is way lower than it was at one point. Not to mention, I've collected so much premium that this is very positive by now. But you can see we have 10 shares of TSLL for free, 23.25 shares of SoFi for free, and of course 650 on Riot for free. So all of these extra shares past the 100 threshold are all shares I bought with just premium, and those have been helping me to lower my cost basis a ton and also ride these upward waves with more momentum that I would otherwise not have. But yeah, let's also go over this whole pins thing. I've been actually trading options, more like buying options just for fun because I get bored, which I know sounds very bad. It's like the black magic of the investing world, or like the dark matter. I don't know what you want to call it, but yeah, no. This week I've been kind of messing around, just having fun, buying some options here and there, and I've actually made quite a lot of money off of it. I'll go over that in a second. But once again, this is my experimental portfolio. I've decided that I've opened a second portfolio on M1 Finance that's withdrawing from my bank account every 2 weeks and investing it into the S&P 500. It's kind of on a do not touch basis, so that account I'm just not touching ever. Like, I don't even have the app. So that's my way of long-term investing, because of course I was trying to do that for the long time, but I get very bored, and of course emotions get control of me, and I end up making poor decisions with my investing. So that's why I have that second account. That's also why I leveled this out to $8,000, just because this is going to be my like play money, where I'm experimenting with stuff like the wheel strategy, with buying options a little bit. Of course, I'm not going to be risking $1,000 on buying options or anything ridiculous like that. But it's more of just my have fun and experiment portfolio. Hence why I'm not going to be contributing any more money to it, at least for now. And in addition, unless this works out very well, but in addition, it's just more of an income-focused, options trading, have fun portfolio than it is a long-term hold. Because there's no point in making YouTube videos if I was just holding SPY every week, because nobody wants to watch that. But yeah, so that's the whole reason for that. So I got that M1 Finance account that I'm putting, I think it's like $75 every 2 weeks into from my bank account. So over time, that's going to build up, and I may end up withdrawing $1,000 or $2,000 to just put in there like a lump sum. I am thinking about buying a car soon, possibly. Hence why I guess I'm just leaving this money in here for now to just let it grow as much as possible. But that's why I'm not taking a lot of this out to go invest into the S&P, because still experimenting with it, and I also might need to use this money soon, like I said, to buy a car. So there's no point investing it just to withdraw it from that other account, because that's my don't touch, never mess with it account, if that makes sense. So I'm trying to take a more healthy investing approach by not throwing all my income into my Robinhood portfolio every single time I get income, because it is pretty unhealthy, I'd say, as a way of investing, because then I don't have spending money and it can just be annoying sometimes. So that's why I'm chilling at 8,000 and I got that second account running. But let's go over pins now. I kind of went on a little bit of a ramble there. But yeah, no, I've been buying some options. Also, I can show you in here. You can see this was our best week by far. I collected $104 in premium last week, or I guess this week. I don't know what you want to call it. But yeah, no, this was my best week by far, and you can see my percentages are pretty crazy now that I've included this week. I also cut out this week because it was more the experiment week. But yeah, no, you can see our average weekly income so far is about $77, which is really, really high. Like, that is a lot of money. That isn't just, a small amount, at least for me. $77 a week, which is crazy. That's an annualized almost 50% return, which is obviously ridiculous. And an annualized dollar amount of about 4,257. And also, I guess I have to update this value. So I guess it's around 53%. So now that we've updated this value, it's more accurate. But you can see that's like 4.5% a month, $400 a month, which is insane. And just premium we're bringing in through the door, that's going into the account. And yeah, no, that's just kind of crazy. And if we look over here, this is my total adjusted return since I started doing this strategy. This does not account for odd lot shares, so stuff like my Riot shares that have made me $20, for example, or my TSLL shares or my SoFi spare shares that I have in this account are not taken into account here. But you can see my overall adjusted is about positive 168, which is really good. So the difference if I didn't sell options and I just bought stock outright would be negative 261, but because of all this premium I've been bringing in, it adjusts that to be about 168. So that's really good. And that's also with these cost bases that may not be exactly accurate. They're a little bit high even. But yeah, no, so yeah, just all in all, things are looking really good with the portfolio. Once again, we're almost at all-time highs-ish, about $140 off or so, or more than that, I guess, $775. But yeah, no, so things are looking good. If I go over to the for fun trading, which I added this little tab, I made about $50 this week buying long options and just kind of trading them throughout the week, as you can see here. And pins was one of those that just got destroyed. It just is kind of fun. I'm investing very little sums of money into these plays, like no more than $50. $50 is even a lot, in my opinion, to invest into these long options. So I'm being very risk adverse in that regard, not in the regard that I'm buying options. That is obviously very risk on. But it is just more fun to do this, in my opinion. And luckily, I've actually come out positive $50, which is quite a lot of money this week from doing that. So that's pretty fun. But yeah, no, I've been doing like earning plays and long calls and, the whole thing. So yeah, that's what's up with the whole pins trade. That's still in my portfolio and kind of what I'm just doing for fun. But yeah, no, I think that is everything. So thank you for watching this video. Tune in next week to see if I'm still green, if I'm still going up. I guess we'll have to see. I mean, this is a very good week. It's hard to beat. I do believe we have CPI next week, though, or this week. Could be wrong on that, but I'll have to check. But yeah, I guess we'll see. But thank you for watching this video, and I'll see you in the next one. Goodbye.